So by now you know how to set up your charts and how to trade the simple strategy. We've shown that with a low winning percentage of just 40%, you can break even not counting commissions. And with a 50% winning percentage, you can make money, even if you are wrong half of the time. Now we encourage traders to shoot for a conservative 50% winning percentage when they begin trading the strategy. But in this video, I want to show you some tips and tricks that will help you improve your winning percentage. The first thing to do is to focus on the right trading time. Depending on the market that you are trading, there will be a window of activity for that market. And so you never know when the market's going to move. If you have a market that is open overnight, there could be news that comes out overseas that spikes the market and creates some trading interest. But in general, the markets are going to be most active when there is the most volume. And so if you're trading in the U.S., this would be in the morning session from 9:30 to 11:30 a.m. Eastern Time. But this is a nice window to focus on with your trading. And you'll find that when you get a little comfortable with different markets, that you'll be drawn to a sweet spot when the market is most active, especially when using range bars, because keep in mind that if there isn't a whole lot of activity and volume and movement in the market, you're not going to have a lot of bars to consider. But when there's more activity, more volatility driven by volume, you're going to get better moves, better opportunities, and that's why it's good to focus on the right trading time. Now, the next thing you want to focus on are reports. Major reports can move the market, and they can take a nice technical trading decision and turn it into a gamble. So instead of trading right when there's a major release where the markets can move and be very noisy and erratic, we like to use what we consider to be our 5-minute rule. This means being out of the market 5 minutes before a major report that could move the markets, and then looking for opportunities 5 minutes following that major report. The third thing to focus on is support and resistance. The markets have a tendency to react to these strong support and resistance levels that traders are watching, especially for day trading. And the support and resistance levels that we take a look at and we are cautious of are the previous day's high, the previous day's low, the main pivot point, the resistance 2 or R2 pivot, and the support 2 pivot, which is also referred to as S2. So most charting packages offer pivot points, and these are levels that you can incorporate in your charts, or you can look them up and calculate them and then apply them manually. The previous day's high and low is very easy to see just by taking the prior session's high and low, but these are key support levels that day traders will pay attention to. Now, let's take a look at a website that will help us with reports. This is ForexFactory.com. They do a great job of introducing the most significant reports for the markets that you're looking to trade. If you're trading international markets, you might want to incorporate other currencies, but in the U.S., we could focus on just U.S. currency or U.S. dollar related reports. So there's a filter option in the top right here. It looks like a thumbtack, and we could actually remove all of the other currencies and just apply a filter that will show reports affecting the US dollar. So here we see that for Wednesday, November 5th, there were a few different reports. The biggies are going to be the red flag, these major reports. ADP non-farm employment change was released at 8:15 a.m. Eastern Time. ISM non-manufacturing was released at 10 a.m. And then we have these medium impact reports. These could move the markets. This is 9:15 when an FOMC member is speaking, and then we have crude oil inventories at 10:30. The yellow report is a low impact report. This was released at 9:45 today. And in general, the red impact reports are extremely important. The yellow reports really won't need to be addressed for most traders, and the orange reports, they could be wild cards. So if you were a conservative trader just getting started, you haven't use the economic calendar before it makes sense to treat them a little more severely or be cautious around those reports. And then with experience, you might find that there are some medium impact reports that you are not going to be concerned with your trading. Now, let's also take a look at our charts here, and I'll show you the support and resistance levels that we program. And again, a lot of charting software packages allow you to add pivot points, and what we've done is we've programmed this for Trade Navigator, and the dashed yellow line is the R2 pivot point, the dashed green line is the previous day's high, the blue line is the main pivot point, and the red dash is the previous day's low, the yellow dash is the S2 pivot point. So we see that the market for today, this is crude oil with a 14-tick bar, the market today kind of bounced around these levels. And so with our trading, if we're looking to take a simple strategy trade, we want to make sure that we can reach our full profit target without encountering a major resistance level if we're going long. If we're going short, we want to make sure that there's nothing interfering with the success of that trade. So we'll look to take a trade if there's room to make our full profit. Otherwise, we'll wait until we close above a key resistance level, because then there's a tendency for the market to move, and if it comes back down, that what was resistance could act as support on the way lower. This is a great example here for the move lower. We come back down to the previous day's high. This is not a trade that I would consider, because we do get a bounce off of support, and then once we break through that level, it's a little easier to get the move lower. So these are key support and resistance levels, and with these three things, by incorporating the economic calendar, support and resistance, and also focusing on the trading time that's going to be most active for the market that you're trading, you can help improve the winning percentage for the simple strategy signals that you take. We talked about how the simple strategy can help you as a trader. We gave the indicators and the rules for determining the direction of the market. So you know how to set up your charts with ease, even the most basic charting software, to know whether the market's in an uptrend, a downtrend, or moving sideways. And more importantly, we showed you how to enter the market to go long or short with very specific entry rules using the simple strategy. We talked about how to get out of the market with a profit target using the average daily range for day trading. We also talked about how to get out and take a loss if necessary using the average daily range as well. We talked about getting out of the market if there's indecision or a change of direction, and that is using a MACD crossover once we're in a trade. And we talked about how to determine the appropriate range bar setting for other markets if you want to branch off and trade other markets that we don't currently trade here at Rockwell Trading. And then last but not least, we talked about trading markets like Forex, and we talked about a revised entry signal for time bars, and we showed you how to use a simple strategy to not only day trade, but to find uptrends and downtrends and stock trading candidates for those of you who like to trade stocks and ETFs and swing trade them with a trend following strategy. So this is the simple strategy and how to use it in any market, whether you're trading stocks, Forex, ETFs, or futures. So what's next? Well, now it's up to you to use the information that you just learned. And the first thing to do would be to set up your charts. You now know the rules for the simple strategy, and you know the indicators that we use. So set up your charts, and then decide on the markets that you want to trade. Are you going to trade futures? Are you going to trade stocks or Forex? Do you want to be a day trader? Are you ready to use range bars, or would you rather begin with time bars? These are the questions to ask and the things to decide. The next thing to do would be to look for entries and exits according to the simple strategy rules. Because getting familiar with the strategy is important, and then the next thing that you need to do is be able to make trading decisions. So once you know what to look for, practice with the rules that we've discussed, and the easiest way to do this is to backtest. You can backtest on a simulator where you're taking trades on a simulated historical data, or you could just go bar to bar and get comfortable and look at 40 trades. Ideally, you want to have 40 trades so you could evaluate the performance numbers and see if there are areas for you to improve. The next thing to do would be to sim trade. You always want to sim trade and practice on a simulator before you risk any of your own hard-earned money. Because if you're not going to be successful, or if you can't be successful on a simulator, you're not going to be successful in live markets. So these steps are up to you to do. Set up your charts, determine the markets that you want to trade, work on entries and exits, get comfortable with the simple strategy, back test at least 40 trades, practice on a simulator, and then it's time to make the transition and incorporate it into your trading plan. So you now have a powerful day trading strategy at your fingertips. It's up to you to do a little extra work and determine the best way for you to use it.